Hi, everyone. Welcome to the webinar today. My name is Alexandra Alvarado. I'm the Director of Marketing and Education here at the American Apartment Owners Association. And we have, of course, some interesting 2023 topics, one of which is important to all of you, your insurance rates, right? Those are going up. I'll have Lauren tell you a little bit more about that. Before we get started, though, I did want to mention that this whole thing is being recorded. We will be sending you the recording tomorrow. So if you miss anything, don't worry. We'll send it to you tomorrow. We'll also send you the PowerPoint slides. And as you all are filtering in, I'd love it if you could put into the chat where you're coming from and how many years you have managed or owned rental property, so you can get a feel for what kind of audience we have here today. So where you're from or where your rental properties are and how long you've been a rental property owner or manager. Hi, Judy, welcome. Hi, Denisha. Utah and California, 5 years, awesome. So I want to talk also a little bit about our speaker today. We have with us Lauren. She's done a few really informative webinars, but this one I think is going to really be a little different because we have a lot of changes that have happened in the insurance industry. She has been with InsuranceHub for over 10 years, and she specializes in advising clients all around the country in regard to their multifamily and other lesser's risk properties. So she's really specialized in the rental property insurance. This is different than your, State Farm or your Travelers. She knows all the different insurance policies that are out there specific to rental property. So she's on another level when it comes to that. When she's not helping her clients, you can find her fostering dogs for animal rescues and only occasionally keeping them. She originally hails from Ohio, but now lives in Decatur, Georgia, with her husband and menagerie of pets. So we have an animal lover on the phone and also insurance expert. Lauren, thank you so much for coming on to talk to our group about this. I'm really excited to hear the updates that we have here for this year. I'll let you take it away.
Sure. Thanks so much, Alexandra. I appreciate that. And I look forward to talking to everybody and seeing where everybody comes from. So today, as Alexandra said, we are going to talk about what to expect for your insurance rates in 2023. So just a bit of background about the agency. So we specialize in multifamily and rental dwellings and other lesser's risks around the country. We're based right outside of Atlanta, Georgia. We were established in 1985 and we have over 20,000 clients nationwide. We are what we call a one-stop agency. So I handle business insurance, but we also have people in our personal lines. We offer benefits, bonds, financial services, and HR services as well. So I know that's not the most exciting information, but just wanted to give a little bit of background about the agency before we get into the topic at hand. So the objective today is to learn what to expect for your insurance rates in 2023. So first, we'll do a review of the 2022 market and events. We'll also go over how previous year's events are going to affect the insurance market in 2023. We'll go over the most probable insurance claims that you will face as a landlord, or that you would most likely face as a landlord. We'll also talk about what you can do to guard your policies from unnecessary rate increases. And then we'll also go over proactive measures that you can take to prevent losses from occurring. And at the end of the session, we'll have an open Q&A, so you can ask any questions that weren't answered, or if you need any clarification about what we go over during the presentation, you can reach out at that time. So first, just a sort of quick 2022 review. So before we get into what to expect for 2023, we're going to just do a brief overview on what happened in 2022. So 2022 was the 5th consecutive year of higher premium costs, continuing what is called a hardening market, which we'll touch on in a minute. But one of the main culprits of rate increases last year was due to natural disasters. So in 2022, natural disasters caused an estimated $270 billion in global losses, and approximately 100 billion of those losses were caused by Hurricane Ian, but this is not a final number as losses are still being totaled. So out of those 270 billion in losses, 120 billion were covered by insurance, so a little less than half. The US alone accounted for approximately 145 billion of those total losses, approximately 85 billion of which were covered by insurance. Now, in the previous year, in 2021, natural disasters caused about 280 billion in global losses, with 65 billion being from Hurricane Ida alone. So 120 billion of those total losses were insured. Again, a little less than half. And then in 2020, natural disasters caused about 210 billion in losses, with 2019 having about 166 billion in losses. So we're going to go over more specifics about natural disasters in more details in the next couple of slides, but it's important to know how big of an effect the increase in natural disasters have had not only on insurance premiums, but coverages as well, and will continue to have going forward. While it wasn't as big of a factor, there is still fallout from the COVID-related lawsuits faced during the peak of the pandemic, with an estimated 100 billion in underwriting losses worldwide. So while most COVID-related claims were declined due to standard virus exclusions located in most policies, it does not and did not prevent lawsuits from occurring, even though few policies did end up paying out to the policyholders. So the costs the insurance companies incurred by even defending themselves in court, despite them winning cases, a high majority of the time, means that court costs before any judgments were made would still be astronomical. And this would end up directly impacting insurance premiums because the cost has to come from somewhere. And unfortunately, insurance carriers are not nonprofit. So during 2020 and 2021, supply chain issues, of course, were a big factor. And while it was mainly due to the pandemic then, last year with the Ukrainian and Russian conflict, that caused additional supply chain issues. China's large COVID outbreak also put strains on manufacturing, and that hit supply chains pretty hard as well. And the fallout from these global events will likely continue into 2023. So that leads us into global inflation. And something that's important to remember is that inflation is a global phenomenon. It's important to remember that it's not condensed only to the United States. So inflation is up mainly due to the cost of housing and construction costs, and inflation rates around the world are interconnected. So the rates last year in 2022 were high in most developed countries, not just the US. The 2022 inflation rate was about 8% overall, but according to industry experts, 2023 is expected to be around 3.5%, so it is going down. And as of now, expected 2024 inflation rates will be about 2.4%. So again, a little bit lower. And that's as of mid-January. So of course, these numbers can change. So, but that's the data that we have on hand at the moment. And just to review, because I mentioned the hard market before, so this means that it's a period of time that's met with higher premiums, fewer carrier options, higher underwriter scrutiny. So underwriters are really looking more at each individual risk, and also higher thresholds for coverage eligibility. So a lot of carriers are really cracking down on what they will and will not cover, especially when it comes to what we call habitational, which is the industry that you're in. So any property that has people living in it, whether it's apartments, condos, or rental dwellings, this has been especially the hardening market has hit that industry more than a lot of others because of the higher claims involved. So Where property insurance is concerned, insurance rates are not only impacted by local events, although the rates that regional and national carriers set are nationwide. So the type of claims that are more prevalent in one area of the country will still affect rates all across the country. But even though most standard insurance carriers used in the US are based here in the United States, it's important to know that there are also something called reinsurance companies, which are basically the insurance companies that insure insurance companies. And that's done in an attempt to spread out the risks that insurance companies are able to take on. And most reinsurance companies are based overseas. Of the top 25 reinsurance companies in the world, only 4 are based in the US. So again, the overall global economy still has local consequences here in the US, and those can directly affect your insurance premiums, since those global events affect reinsurance companies as well, and of course pass that down to the local companies. All right, so that's 2022. And a bit more, I know we said that we were going to talk about a bit more of the weather-related events. So this is a chart provided by an insurance analytics company in conjunction with a few reinsurance companies. And again, reinsurance companies are insurance companies that insure insurance companies. So this chart shows the overall trend adjusted for inflation for what is called cat losses, which is fancy and shorthand term for catastrophe losses, which are weather-related claims. So wind, hail, named and unnamed storms, tornadoes, flood, etc. We also refer to cat losses as natural disasters. So there are a lot of the same terms used to describe, or different terms used to describe the same type of events. So on this chart, you'll see that between 1980 and 2021, average losses that were covered by insurance was $23.8 billion for that time period. When you look more specifically at 2012 to 2021, the average insured losses were $44.1 billion. So as this chart shows, over the past 10 plus years, catastrophe-related claims have faced a huge increase in both frequency and severity. So this uptick is a major driver of increased premiums and lower market capacity, since many insurance carriers are not able to cover such high increases in claim severity, especially without raising those premiums in catastrophe-prone areas. So these claims, of course, directly impact your insurance premiums, as catastrophe-related claims happen all across the country. So next, we'll go over the most likely weather-related events that you will face based on the area of the country that your properties are in. Okay, so this is actually a chart that I made. You may have seen this in one of the Rent magazine's articles published, I think it was earlier last year or late 2021. But this is just an infographic on the most likely type of weather-related events you will face based on the area of the country that you are in. Now, this does not mean that just because you are in one part of the country more susceptible to a specific type of claim, that you won't face something altogether different. So, for example, you'll see that Texas is most likely to face claims due to storms and hurricanes, but of course that does not mean a blizzard won't come through and cause billions of dollars worth of damage to frozen pipes and downed power lines. So hopefully this chart makes sense of the type of claims that you are most likely to face. And some states are susceptible to more than one type of claim. Some, like California, have 3, so lucky you. But again, it doesn't mean that you're only going to face these types of claims. It just shows this is most likely what you're going to face in your state. Okay, so now we're going to go over to the anticipated trends for 2023. As Alexandra had mentioned at the beginning, you can still expect rates to continue to increase due to previous years' claims trends. That shouldn't be a surprise based on what we went over just now. But Hurricane Ian claims are still ongoing, as mentioned before, and due to the huge payouts, due to increased severity of weather-related events, this will cause rates to remain high, especially where catastrophe weather events are more likely to occur. Unfortunately, there's not really an area of the country where you definitely won't face some catastrophe or another. I'm on the East Coast, so on the Atlantic side, we are much more likely to face hurricanes, while those on the West Coast, of course, you are met with a higher likelihood of droughts and earthquakes. So no one is really safe anywhere, which is not exactly what we want to hear, but unfortunately in insurance carriers' outlooks, that's how they look at it. So anyways, the more rate increases are going to occur to offset the economic and social inflation losses as well. Rates are also impacted because there is a reduction in capacity in a hard market, especially with buildings that are older and frame construction. So most all the type and the age of buildings they will allow themselves to insure. There is a big overhaul last year, especially when it came to frame build, so wood built construction that's over 30 years old, which I'm going to say most of you have buildings that are unfortunately considered older. As someone who's over 30 years old, it hurts a little bit to say that, but unfortunately that's the truth. So buildings over 30 years that are frame construction will have fewer markets available to them due to stricter underwriting guidelines. So expect rates to continue to increase due to previous year's claim trends and remaining in a hard market. So if you have a good loss history, which means you haven't really made any claims, you can still expect a 5 to 15% increase. Now, if you don't have a positive loss history, you can expect, unfortunately, much higher increases. You're looking at 25 to up to 150% rate increases. Now, I know that's a big range, but it's because a lot of it is going to be based on not only regional and national carrier standards, but individual risks and what you have done to mitigate issues going forward. So again, especially for older buildings with frame construction, those rates will remain high, mostly because frame built structures are the most likely type of buildings to face damage. So this is because older building systems are more likely to break down and be affected by external hazards, and wood, of course, is more prone to catching on fire and spreading fire. So we are also expected to see an increase in water damage claims, so broken pipes due to freezing, like what happened to almost the entire state of Texas during freezes in both 2021 and 2022. The cold weather snaps have caused an increase in pipe burst claims, especially with older buildings that have older pipes. So carriers are definitely taking this into consideration when looking at rates as well. You can also expect to see carriers requiring you to carry higher deductibles than before. So you might be used to seeing, especially on the single family rental side, low deductibles like $500, $1,000, but due to the increase in both frequency and severity, most carriers, at least on the commercial side, are going to want you to carry deductibles starting at $2,500. That's not to say that you can't get quotes for $1,000, but especially due to rate increases, you're going to want to consider higher deductibles because that'll keep the premiums a little bit lower. Depending on the area of the country you are in, also expect to see separate wind and hail deductibles. So those of you that have properties on the Atlantic coast will not be surprised to hear this, but I am based in Atlanta and we're still about 4 hours from the coast. And Georgia has a very small coastline compared to most other states in the Atlantic. And most of the major standard carriers here are even requiring separate wind and hail deductibles. So that is an overview of 2023. And now, Alexandra, if you could introduce the first poll question, that would be great. So what was the highest claim cause for property last year? And your choices are fire, cat losses, so weather, or maintenance. And just let me know, Alexandra, when those are in.
Yeah. I'll give it about like another 20 or so seconds for y'all to give this one a good guess. I'm curious as well. I don't know the answer to this one. I know fire is a pretty big one, especially around the holidays. So I'm sure that one's up there too.
I can tell you that all of them are a possibility, but we'll see what you guys think as far as what you think the most likely claim scenario is.
Okay, looks like a little over half of you have answered. So I'll go ahead and close the poll. We'll share the results.
Okay. All right. So we have fire, cat losses, and maintenance. So most of you think cat losses, which is definitely a high cause, but it's actually fire. Now, it's a little tricky because based on this data, it does include wildfires, which I think in this case is a little bit cheating because wildfires can be included in natural catastrophes, but also some some wildfires are not necessarily based in weather-related events, even though weather-related events as a secondary peril can certainly make it worse. So 2017 to 2021, the top 3 claim causes, so the number one, as I said, was fire, explosion, and that does include wildfires. So that was at 21%. Natural catastrophes, weather-related, cat losses, not that much lower, 15%. Honestly, if I wasn't in my industry, I would have put natural catastrophes as well as my guess. And the last one would be faulty workmanship and maintenance. So that came in at 9%. So those were the top 3 causes of loss for property claims last year. And when we talk about faulty workmanship and maintenance, Champlain Tower collapse was a big percentage of that. So in regards to that, a judge had approved about a $1 billion settlement. Of course, this made nationwide news and put insurance carriers on alert when it comes to maintenance issues, even more so than before. So expect more scrutiny to come from underwriters when it comes to maintenance. And in regards to the top liability claims, this probably doesn't come as a surprise to anyone, but the main culprit for top liability claims for landlords remain as trip and falls. So this does tie into the importance of maintenance as well and making sure that all aspects of your property are safe. So $54,000 is about the average cost of a premises liability lawsuit, and approximately 51% of plaintiffs win their premises liability claims, although you are still responsible for attorney and court costs regardless of the outcome of the lawsuit. And the average total amount paid out in premises liability claims per year totals about $4 billion. So again, with maintenance, this is definitely something you want to focus on when you're prioritizing what you're doing with your property. Okay, so this I just wanted to touch on. I took a screenshot from a Swiss reinsurance webinar I had attended last year. This is from data compiled between 1981 and 2020. At the time I don't believe that 2021 data had been released, but it's important to look at the data from wildfires. It's one of the main causes of claims that have been on the rise in the US. So as you can see, and I know it's a little hard to read exactly how this chart breaks down, but ever since 2011, there has been an exponential growth in the severity of wildfire claims. The first 3 bar graphs shown in blue show a 10-year period payout, and the largest column on the far right with all the other pretty colors shows a 10-year period as well, but note that it's broken up by individual years on that final column after 2015. So 2016 had as much damage in 1 year caused by wildfires as the previous 4 years combined. So the 2011 to 2015 period. And 2017 and 2018 and 2020 have all been met with as many wildfires as the 2001 to 2010 period combined. So the exception was 2019, but as in anything, there can certainly be outliers that do not affect an overall trend. And the overall trend shows that damage caused by wildfires is increasing. This is also a very large reason why, especially on the West Coast, you're going to see higher underwriter scrutiny for frame build construction, because of course, not only is our wildfires going to burn wood down, but tenant caused fire damage is another main concern when it comes to claims. And whether fire comes from inside or outside, frame buildings still burn. So I just wanted to go over the fire trends, especially for those on the West Coast. So I know what most everyone is going to be interested in is what you can do to obtain the most competitive insurance rates. So the first is focus on safety. Make maintenance a priority. This is something that is completely controllable and should be a top priority for all landlords. And maintenance is key. So keeping the property well kept and clean is only going to benefit you as a landlord. So making repairs before they get worse and more expensive. Always get ahead of the problem. As I mentioned earlier, slip and falls are a major cause, the major cause of liability claims for landlords. Most of those are due to issues with grounds or stairs or surrounding walkways. So make sure you're always doing regular checks on the grounds. Also look at installing security cameras so that if something were to happen on your property, whether it's due to a property issue or a potential liability issue, you will be, it'll be easier to find out who or what caused the issue, so it is less likely to cause an issue again, so you can address it. And you should also require tenants to carry renter's insurance, but we will touch on that later. So the next is upgrade building systems. Sprinkler systems retrofitting, central station fire alarms, and replacing roof wiring and plumbing as soon as it's needed. Now, I am not under any illusions that all of these safety features are going to come at a low cost of a price point to be immediately effective, but hopefully this will provide some good goals to reach for, and maybe you'll end up prioritizing building safety features, so next time you're looking at investing in properties, you can see if these, especially sprinkler systems and central station fire alarms, those bring the biggest insurance discounts. So typically sprinkler systems provide approximately about a 10% discount from just standard premium. Central station fire alarms, depends on the carrier, but between 5 and 7%. So replacing roofing, wiring, and plumbing also goes along with maintenance, which we talked about before. But if you're updating to green features, many insurance carriers are providing discounts for those as well. And lastly, even though you might not be ready to invest in upgrading your building system features. That doesn't necessarily exclude your portfolio from getting better coverage and premiums, especially if you approach an agency that specifically focuses on rental dwellings and apartments. Those agencies will have access to carriers that your local agent likely does not have access to. So it's important to make sure that you are working with an agency that is knowledgeable in your industry and has the ability to shop your policies around as coverages and markets change. So I did want to provide you guys with just a couple of insider tips for you guys to consider moving forward as well. So the first is, before you close on a new property, always make sure to request 3 to 5 years of loss history from the current owner. So this loss history shows the period of time, so between 3 and 5 years, of how many claims and how severe the claims were on the property you're going to invest in. So if the loss history is clean, so there's nothing listed, that can mean better rates for you. And you can also sleep well knowing that you're not buying a property that has known to have problems. Now, if the loss history is not clean, if there is a history of multiple claims, especially, you can use it as a bargaining tool when purchasing the property, even though it certainly, it probably definitely won't be good as far as saving money on insurance, but you still will know what you're getting into before you close on the property. So it'll also help you get ahead of known potential issues that the building and management has faced in the past. So again, for older buildings, which is unfortunately categorized as over 30 years, please also make sure that you find out what year the roof, the wiring, and plumbing were last replaced. Not knowing what you have to face in terms of property investments, since new roofing is not cheap, and bringing aluminum wiring and other out-of-code electrical panels can be even more expensive than new roofs, will come back to haunt you. So as unexpected and large costs can sink a lot of people, so please make sure that you protect your assets by finding out the full picture of what you're buying. It needs to be something that you require of sellers before you purchase a new property, because not doing so can cost you big. And again, if you find out that you're buying a property and they haven't replaced the roof in 20 years, you know that you're going to have to replace it probably within the next 10 years, depending on the type of roof, of course, but you can use these as a bargaining chip. So if you are looking at in a building that hasn't had their electrical panels replaced since the 80s, again, that's a cost that, especially if you want standard insurance companies to cover your assets, which you do, that's the goal, you're going to have to update those regardless. So you can still use those factors as bargaining tools before you close. Something to also note is that insurance never covers general wear and tear. It is the responsibility of the property owner to make sure that the building is in good condition. So don't expect insurance to cover you if there's a plumbing leak or a roof leak due to the age of those systems. So next, the presence of any of the following will make you ineligible for standard insurance coverage. Aluminum wiring, and that was used mainly in the 60s and the 70s. It's a big fire hazard. Polybutylene or PB plumbing, that was used in builds between the late 70s and the mid 1990s, and that was used as a cheaper alternative to PVC, but I can tell you I have clients with PB plumbing, and their claims are every year are astronomical. Wood burning fireplaces, we've talked about frame construction and how wood does burn. So wood burning fireplaces are officially on the list of no-goes for standard insurance carriers. If you have high vacancy rates, a high crime score, I can say based in Atlanta or based in really any major city, there are areas that are prone to higher criminal activity than other areas of the city. So if you're buying in a area that has higher crime scores, you're going to face a much harder time getting standard insurance carriers to cover you because the higher likelihood of claims. As we touched on, higher claim history over the past 3 to 5 years, that can push you into the non-standard market as well. Frame buildings over 4 stories that do not come with the sprinkler system or central station fire alarms. Those are pretty much no-goes immediately. So that's something to keep in mind. And then this goes without saying, if you're on the coast, especially on Atlantic. So Pacific is different. California, Oregon, Washington, you guys don't really have hurricanes to worry about, knock on wood. So you guys have, of course, others to worry about, but coastal properties on the Atlantic coast and in the Gulf, so Texas up to Maine, coastal properties, if you want wind and hail coverage, you will have to go to a non-standard market. So those are just a couple pro tips. And then Alexander, we have our last poll question. If you want to pull that up. And this is just more informational, so there's not really a right or wrong answer, but how many of you require your tenants to carry renter's insurance? And Alexander, just let me know.
Yeah,
I'll
give it a little bit more time.
Yeah.
And see, I am curious as well to see how many people do require this. I know we preach it a lot in our articles and content that we put out there, because I know you've actually brought that to my attention a bit.
Yeah.
So let's give it a few more seconds here. Looks like
No
over
problem.
half of you.
I'm not going anywhere.
We do also have some really great questions. By the way,
Great.
If you do have questions, I love that you guys are putting it in the question box. Make sure you keep putting it there, not the chat, so we don't miss it. Go ahead and share the results of the poll.
Okay, good. All right. I was a little worried based on a lot of conversations I had with clients. So about 54% of you require to carry tenants, for your tenants to carry renter's insurance. 46 of you do not. Okay, I know, Alexander, you said that you guys preach a lot about it. Obviously, I'm biased as well, so we're going to talk about renter's insurance. So should I require my tenants to carry renter's insurance? And the answer is absolutely yes. As the landlord, you're absolutely required or allowed to require your tenants to carry renter's insurance, either in terms of a new lease or a renewal. You'll have to look into state laws to get the specifics, but there are many benefits to requiring your tenants to carry renter's insurance and not nearly as many drawbacks. So why should you require this? Of course, it protects the tenant's personal property, which is a big benefit to your tenants in case there is damage caused to your tenants due to a covered cause of loss. So it does benefit them. They want their stuff to be covered. I can tell you, when I was in college, I had renter's insurance, and I went to college in Memphis. I went to Rhodes, and it unfortunately one day we were broken into, and if I did not have renter's insurance, all of the jewelry that was stolen, I wouldn't have gotten anything for. So that, of course, is worth it, especially because it's a low cost for the tenants. So it also, more importantly for you, protects you as the owner against negligent destruction of property. So I'm sure most of you have had tenant causing some sort of damage, whether it's on purpose or not, and you as the landlord have a course of action to take and have something to fall back on, which is not your policy. So that's always good. It can also provide dog bite liability, especially if you allow pets, and honestly, even if you don't. Doesn't mean that you don't have tenants that might sneak in a dog or two. I won't say that I've never done that. In college, I might have found a stray puppy and brought him in, even though I shouldn't have. But it's still something that you want to have covered for, even if you don't allow pets. It can also weed out undesirable tenants. If your tenant cannot commit to providing their own coverage for their risks that come with being a tenant, you probably do not want them. So it's something that can help weed out undesirable tenants as well. It can also provide coverage for relocation expenses in the result of damage that makes one or more of the units untenable for an extended amount of time. So if there's a fire and it affects 4 of your units, your tenants can't stay there while the damage is being repaired. They have to go somewhere else. So even though under business income or loss of rents coverage for your policy, it would provide that amount as well, you still ideally want the tenants to have their coverage for that as well, so it doesn't hit your insurance first. It lowers the chance of your insurance increasing due to a claim caused by a tenant because it reduces the risk of a lawsuit against you. So we highly recommend that you require your tenant to also name the entity that owns your property as an additional insured so you can be protected if there is a lawsuit. But regardless, if you are named in a lawsuit because of a tenant-caused issue, then you still have a barrier of coverage between the claim expenses and your policy, because renter's insurance provides liability coverage for the tenant's liable actions. So you want that buffer. You do not want your main landlord policy to be the first stop for any issues that are not caused by your exposure as a landlord. So requiring your tenants to carry renter's insurance will only benefit you, even though I hear some people say, well, it's hard to keep up with it, which is absolutely true. There are options that you can actually carry a master renter's policy. So you can carry a renter's policy on behalf of your tenants, and you can just pass along the cost to them. So that's something that you can look into. But also, I assume most of you are leasing to adults, and unfortunately, as adults, we have standards and requirements of things that we don't want to do, but we really need to do anyway. So one of those things is protecting ourselves and protecting our assets, and carrying renter's insurance is not that difficult. As someone, even though we own our house now, and I'm sure you guys have all rented at some point in time, getting renter's insurance is not hard. You can typically couple it with your auto insurance and get a discount, but it's not a big battle. It's not something that takes a lot of time. We have a personal lines department too that writes renters policies all day long. So if you need to give your tenants some guidance when it comes to obtaining renters insurance, then we can definitely help you out with that as well. And I talked to, I think it was four or five standard insurance carriers. Every single one of them assumes that you as a landlord are requiring your tenant to carry their own renter's insurance. So it can cause issues during a claim if you turn something in that really should have been covered by your tenant. So we want to prevent that as well. So this is just how to reach me. This is our direct line and my direct email address. And I wanted to include, since Alexandra mentioned that I do some animal rescue. This is Gus. He's one of our dogs. He is my assistant. He is usually sleeping right next to me, but he was a good sport and let me put our headphones on and dress him up in one of our t-shirts. So he is he's my assistant and the employee of the month every month. So
I love it. I love Gus.
Yeah. He's
All
great.
right.
He's a great dog.
My dog has left.
Oh,
so she was behind me at the beginning.
she's over it.
She's over it. She's over it.
So now it's question time.
Yes, it is question time. And of course, if you all want a consultation with Lauren or someone on her team, honestly, I'll speak a little for you, Lauren, because I don't think you sell yourself hard enough.
Sorry.
Lauren really is not biased because she has access to so many different policies. Her whole job is to find a policy with a carrier that works best for you. They put together a fantastic report that basically gives you all your options in your specific rental, and that way you can make a decision. The worst thing that could happen is you find out that the insurance that you have is already the best price, right? And that would be good to know too. In another case, though, you may be able to save some money, maybe even get more coverage or better coverage now, especially that we've gone over some of those items that maybe you don't have in your policy. And I know people don't really know what's in their policies. And so having an expert take a look at it, I mean, I'm sure, especially how big they are. I mean, it's like a textbook.
It's not fun.
Not fun. Have Lauren do it.
Sure.
Lauren will do all the unfun things for you and analyze your policy.
Absolutely.
So I'm going to leave that up, and let's dive into the questions if you're ready for that, Lauren, unless you have anything else to add to that.
Well, and thank you for saying that. And that's something that I do like to pride myself on, is I don't like wasting my time and I don't like wasting your time. So I am not saying that what our options, that what we have at our agency is definitely going to be better than what you currently have. There's no way to guarantee something like that. But I will tell you up front if what you have currently is going to be your best option, even if it's not with us, because it's not really my goal. Of course, we would love to have you as a client, but my true goal is to make sure that you're properly covered for the exposure that you carry. So, and something just to keep in mind, if you only have a few rental dwellings, you're going to be working with our personal lines agent. Her name's Jessica, and she's wonderful. But when you reach out to us, that's who you'll hear back from. I'm more on the commercial side. So apartment complexes, condo associations, larger schedules of smaller rental dwellings. So if you have a bunch of single family dwellings, duplexes, quads, etc., then that's what you'll go to for me. But my markets are going to be slightly different than what you'll find on the personal line side. But that doesn't mean that our personal lines don't have great options, because they absolutely do. So that's just something to keep in mind. The worst thing that you can happen, as you said, Alexandra, was you find out you're already in the best place that you can be. And I will tell you that because, again, I don't like wasting anybody's time. So
Fair enough.
Benefit from getting at least a review.
I like that. Okay, so let's dive in.
Sure, what you got?
So, we got some questions. I'm going to kind of work backwards, since we were talking about the renter's insurance and this master's renter policies. The question here from Jack is, what companies offer that? This is like a new thing, I think, for some of the people here on the call. They haven't heard about this. And then Sheila asking a similar question, if they should be additionally insured, but she doesn't want the landlord entity to be known to the tenants. So that might be maybe
makes it a little harder to be.
A little harder. Yeah. But what about the master's renters policy? That would maybe mitigate that, right? Because the tenants wouldn't know the landlord's company name, but necessarily, I think, right? Or how would that work?
Right. So, well, it's different in master renters policies. There's not that many markets out there. That is true. There are a few options. Nationwide has a product that, and they aren't everywhere, but there are a few places. And then a carrier that we sometimes use, especially for smaller schedules of rental dwellings, is NREIG, National Real Estate Insurance Group. They offer a master renters policy. When it comes to those, typically they are more expensive than what you would what tenants would face if they just went to their local personal lines carrier, if they carry insurance for auto or whoever your neighborhood, State Auto, State Farm, or Allstate, Nationwide, any of those personal lines policies, policy carriers. It's going to be less expensive doing it that way, but master renters policies exist for those who, especially with more units, have a harder time chasing around all of their tenants to make sure that everyone provides it. It streamlines the time. It's not going to save money, but again, I guess it doesn't really matter to you as a landlord because it is a price that you can build into the lease. I mean, I assume that I'm not an attorney, so it's something that you're going to want to discuss, but you can't add it mid lease. You have to add that price on when you do your lease renewals. So like I said, there are a couple carriers that do that. There's not enough in the market to provide lower premiums quite yet, but it's definitely something to look into if you're having a hard time getting that done. Now, if you have a property management company, they should really be in charge of making sure that every year that they get certificates of insurance showing that your tenants are carrying renter's insurance. In regards to the question about additional insureds, you kind of need a name to be added as an additional insured, so not being able to supply the name of the entity, it kind of makes it impossible to have that happen. So it's something I would probably ask your attorney, or if you have a property management company, ask them to see what other clients do in that case. But typically, at least on our side, on the front end of things, the entity that owns the property is the one that needs to be added as the additional insured, because that's the only way you can get coverage, is by listing you and your entity as the additional insured. There's not that I know of, there's not really any way around that, unfortunately.
Okay. Well, definitely something to look into. And I know Maria says that we require renter's insurance, but none of our tenants actually provide us proof. And so I know that happens a lot.
It does.
At the end of the day, though, you are the landlord, you are setting your terms. When someone moves in, making it very clear what those terms are, I think
it should be in your lease.
It should be. There should be a clause in your lease.
There's no reason
Absolutely.
it shouldn't be. Yeah.
You can have that in there. You don't give them the keys until they show you the proof. You make it a requirement, just as you do your tenant screening or just as you do the security deposit. It's the same thing. Think of it as just another requirement that you have for your rental. And when they go to renew the lease, it's a requirement for the renewal, and also maybe even incentivizing them if they are able to give you that sooner rather than later. Absolutely. So you don't have to chase them. I would give them a Starbucks gift card or something just to have updated records and all the insurance stuff sent to you on a timely fashion. So get creative with it. Okay. So
also, sorry, before just to touch on that, because you had mentioned, so being the additional insured too, if I know that chasing around tenants to get proof of insurance, like chasing toddlers, there's a lot of back and forth when it comes to making sure your tenants do that. But if you have your entity listed as an additional insured, then if their policy cancels midterm, you will be notified. So that's something that you can then stay on top of and be like, hey, we got this notification from your renter's insurance, according to your lease, you cannot let this lapse. So make sure that you provide it again. So I know it's a little bit more work, but if it prevents claims, then it's definitely worth it.
Okay. Yeah. Good advice. Wayne says, if you already own buildings that are over 30 years old and you're currently insured with a carrier, would it be difficult to switch carriers?
I wish there was a yes or a no question or answer to that question. It depends. And I know I hate that answer, but if your building is well maintained, if you have updated the roof and the wiring is up to code, plumbing is up to code. And when I say plumbing, I don't mean fixtures, I mean actual pipes. Then yes, there are a few options. And because I specialize in writing multifamilies, I have access to a few very picky carriers that don't work with a lot of agencies, but they don't have any caps on the year built which is great. And there are not many carriers out there that do that anymore. So if you have well-maintained buildings, then and I'm saying, if you're not on the coast, on the Atlantic coast, then yes, there definitely could be other options for you. It depends on who you're with now and the location of your buildings. Like I said, coastals can be really hard, but if you're more inland or if you're on the West Coast, yes, there are definitely options.
Great to know. So a good question about the security cameras from Go Lang. He's saying, is there a privacy issue with having security cameras up on the property? Like, can you elaborate on like that type of requirement?
Yeah. Sure. So and to answer that question, I can only really answer in insurance terms. So obviously putting them inside your units is not ideal, and that's something you would want to have to talk to about with an attorney more than anything. When I say security cameras, I mean the grounds, so the exterior of the buildings and common areas. So if you have hallways, if you have, obviously pool, if you have a pool, you should absolutely have a security camera up. Anything that surrounds your grounds. So if there is a break-in, if a car runs into your building, if there's, any exterior events, if someone claims that they tripped on a broken stair and you are pretty darn sure that all the stairs are well maintained and it could be more of a fraudulent type of claim, those are going to be the areas of property that you want security cameras on. So again, public spaces, pretty sure those are legal everywhere, but again, check with an attorney. Private spaces and units, no. I don't think that that's something that you can do. So hopefully that clarifies that.
Yes, absolutely. James has a great question. He's asking, what is the least amount of coverage that you should carry on an umbrella policy for liability?
That's a great question. And to answer that question, again, it depends. So how many units do you have? If you have one single family rental dwelling, I would defer to our personal lines department to answer that. If you have 200 units, it's going to be a little different than if you have 2,000 units. So it also depends on the area and how acceptable liability claims are. So if I get more details about the number of units and the locations, I can answer more specifically. But for anything under, I would say 50 units, usually for an umbrella policy, carrying 1 to 2 million additional in umbrella is fine. But again, it'll also depend on the area, and the umbrella goes over the general liability. So it's in addition to however much you carry in your liability policy. And typically, especially on the commercial side, the minimum is carrying $1 million per occurrence. So umbrellas would go on top of that. So it would be in addition to that 1 million. So if you have a 1 million umbrella and 1 million general liability policy, you technically have $2 million of coverage. And if you have a $5 million umbrella and a $1 million general liability policy, you technically have $6 million. So you would just add it in. Sometimes it's confusing, so I like to clarify, because umbrella policies, I have a lot of clients that have get a little confused with how that works.
That's a good question. Okay, and Jack asking, how do you get insurance to explain why they decline coverage?
Well, Jack, that is a good question. And the answer is get your agent to do it, because typically, especially when you get declination letters, they are very, I'm trying to think of a good PC word to use. They don't really do much as far as explaining the details as to why. They're pretty, they make kind of an overall excuse about it. So when you get a letter, And sometimes it's hard because the letters come to you as the insured before they come to the agency, which causes its own problems. But reaching out to the agent and saying, hey, I learned that this was declined. This is the letter, show them or show us a copy of it. And then we reach out to the claims adjuster and basically demand an answer. And that's typically how I handle it, is I call on behalf of my clients and say, I need more reason, because saying it's declined because of the age of the roof is not specific enough. So those declinations, especially if you're talking about a letter that you've received, declination letters are not typically super specific and individualistic as to your specific. It's more of a pre-filled, this is why it's declined. And I understand that it's a frustrating letter to get because you want more details than that. So you can either fight it or just learn about what to do in the future to prevent declinations from coming in. But if you have something like that now, reach out to your agent, ask them to get more details and get to the specifics of reaching out to the claims adjuster themselves and get more details. That's really the path of least resistance for you. You can also reach out to your claims adjuster and be like, I need more details. Why was this actually declined? But if you're having trouble getting answers from your claims adjuster, then reach out to the agents. Usually they're quicker to respond to the agents.
All right, Jack asking, in your experience, how do the national companies like Geico, Allstate, State Farm compare versus the others or the average, he put?
So those companies you list are really more personal lines, and I guess I would need more specifics as far as the average versus, because to me, the State Farms, those are average companies. So I don't know really how to answer that without getting more details as far as what you mean as average. So if I could get more details, I would be happy to answer that. And you can also shoot me an email if you want more specific information. But yeah, Geico, State Farm, Allstate, those to me, I kind of classify as like the average or the standard personal lines carriers. So I would just need a bit more detail as far as what you need to answer that.
I think safe to say though, having a more business-oriented insurance is probably best for a rental business, right?
Absolutely.
So there's definitely a lot more carriers that you probably have never heard of because you may only know about what you're calling, Lauren, the average, which is the State Farm, Allstate, and all that. That's consumer to consumer kind of product.
And the ones you go straight to, like
right.
the markets that I work with typically is, well, they're all business. They're all for business insurance purposes. They're all A-rated carriers or better, but like State Farm, you can only go to State Farm. You can't go to State Farm and get quotes for multiple carriers. We're a broker, so we have access to multiples. We actually do work with Allstate on the commercial side, but they don't handle any sort of habitational risks on commercial. But their personal lines are captive, so you have to go to Allstate to get Allstate personal lines quotes, just to make it complicated.
Yeah. Well, Vicki has a really good question as well that I don't think we've touched on. What about short-term rentals? Are they hard to get covered?
Yes, yes, they are, but there are still markets out there that will cover short-term rentals. It's higher risk because the turnover for tenants is higher. So the more people in and out of your building, the higher the exposure is. So fewer carriers want to take that on. But yes, if you have short-term rentals, there are still definitely options out there for you, both on personal lines and the commercial side.
That's great. Maria asking, what are the different limits to require for renters insurance?
Well, that's a good question. As far as like their contents coverage, they typically renters policies will come with, 10,000, 15,000, 20,000. So on the property side, that's usually predetermined, or you can choose your own, or that not you, the tenants can choose their own if they have if you have higher end rentals, then you have tenants that carry a lot more. If you have larger rentals that, they have more belongings, that's something that can be based on the actual tenant and what they want. When it comes to liability, typically the lowest liability limit that's offered is 100,000 per occurrence, and I believe most renters policies have a $300,000 aggregate, but 100,000 liability limits is the bare minimum.
Okay, that's good to know. Nicholas has a great question. How do insurance companies consider loss ratios over time? Is it over time? Is it a single year? What's average, good or bad, et cetera, on loss rates? Will rates always increase meaningfully with a loss claim?
Great. Okay. So to answer the first part of the question, as far as loss history goes and loss ratio, yes, that's always taken into consideration, especially if you own the property. So a new purchase is different because you don't necessarily have the loss history because you don't have any yet. So it's new. So with properties that have had claims, typically it'll be, depending on the carrier, between 3 and 5 years is taken into consideration, that loss ratio. So what carriers want to see is the loss ratio, and that's the amount of payout of claims versus the premium. So they want to see under 25% is to keep it positive. Anything above is when they get a little tricky, and you'll get non-renewals. I mean, there's really not a set number, but keeping loss ratio, I mean, ideally 0, of course, but under 20% is going to be what you want to keep it as, to keep rates lower. Alexander, can you repeat that second part of the question, because I don't exactly
Let me pull it up again here.
Sure.
I may have let's see, where did it go? Here it is. You all have so many questions. I got to go through. I got to go through a whole list. Will rates always increase meaningfully with a loss claim?
Yes. So with loss, and unfortunately, in the hardening market that we're in now, you'll likely still face rates even if you don't have an individual claim, because a lot of what the rates are based on is the claims loss history and the loss ratio of the entire industry. So with habitational risks, there are higher claims in that industry than what like an office risk would be. So like I'm in insurance, we work from an office, we don't live there. Usually the buildings are maybe not newer, but they're larger buildings. They're not in frame construction. So the risks and the rates when it comes to an office-based risk like insurance or even doctors, when you take med mal out of it, it's going to be lower because the risk is lower. With habitational in general, the rates from loss history across the entire industry is what's going to be taken into consideration, and that's how rates are set. So when you have a loss, it's going to affect the premium nowadays, especially because of the hardening market and the scrutiny that underwriters are looking at. It'll also depend on the fault. So whose fault was it? If it's a fire that a tenant caused and you didn't require them to carry renter's insurance, so it all went under theirs, they're not going to love that because the likelihood of that happening again is higher. So it is very much individual based, as well as industry based. There's really not a straightforward answer other than yes, the loss history is absolutely taken into consideration, and when you have a claim, it's going to affect renewal rates. So if not the first year, then the second year.
Dee has a related question. Will a loss in your portfolio cause all the other properties rates to increase as well, or just that one?
It depends on how the policy is structured. So if you're talking about like single family rentals, if you have them all under one policy, most of the time, there are some companies this does not apply to, then it can affect the rates of everything. But if you insure them individually, so especially if you have apartments and you have XYZ LLC covering one and ABC covering another, then no, because they're under different entities. So insuring them separately is going to help as far as loss history, because you have them structurally set up differently. So it's easier to keep the loss history contained when you structure policies that way. If you have a whole bunch, like if you have a master policy, then it can, even though underwriters say that they will really only look at per location, but if it certainly it can affect the whole premium. But it'll affect the whole premium in the way that if you have a master policy with a whole bunch of properties on one policy, then the premium overall, of course, will go up because the property that was affected is in that policy. If that makes sense.
That makes total sense. So is it a lot more work though? Like what would be the disadvantage of insuring each one individually?
Well, it's more work on the agency side than anything,
Okay.
which you guys wouldn't have to worry about because that's our job, is to make sure that you're insured properly. It's not really, well, it could be considered a downside, even though it really shouldn't be, is that the premiums might be a little higher because the way that at least on the commercial side policies are structured is you have it's really the liability limit. So if you have 5 locations on one policy, you're typically sharing a liability limit because you have one policy, and usually liability limits are per policy. You can get a per location aggregate for some carriers, some you can't, so it just depends. If you have 5 properties and under different LLCs and you insure them individually, each policy is going to have its own separate liability limit. So you'll have 5 times as much liability coverage because each policy has its own liability limit. So the premium will be higher because your liability limits are higher. So it's not like a huge amount typically. I mean, it depends on how many units you have, but if you have one entity that owns all properties, they should only be on one policy, because that is how policies are needing to be structured for risk purposes.
And James has a related question as well. Does the loss history follow the property or the owner?
Great question. Property. So, well, the property, as long as it's, and again, this is commercial. On personal lines, I think it's a little different because it can follow the owner. Depends, I think, on personal lines. It can pull up the name that's associated with the claim on personal, but on commercial, especially if we're talking about property claims, it only follows the property. So the loss history is for that location and that entity. So when you pull losses, so if it can get a little complicated, but if you pull a loss history for one entity and they have multiple locations, you'll see them listed, but the only ones that would apply would be to that property, if that makes sense. It really depends on how the policy is structured, your current policy is structured. So, but the property losses only follow the property that it applies to. And same with liability. As long as we're not talking about an errors and omissions or directors and officers coverage, which is more covering an entity than it does an actual location, and it covers that location only.
That makes sense. Okay. Stella has a good question. I think you covered it, but I think it's worth mentioning again. She's asking, will a single family rental require commercial insurance?
It wouldn't. If you only have 1 or 2, then no, it's not worth it. We can do it, but it's going to be a lot more expensive than what you currently have. But our personal lines department does have options. You just wouldn't be through me. So insuring you commercially when you have a very low number of units is not beneficial to you. I mean, again, we can do it, especially if you expect to grow exponentially. If you expect on having, if you go from 3 units to 30 in a month, then that's something we want to talk about. But if you're going to be under probably eight total number of units, it's not going to be beneficial for you, especially price-wise, to look at commercial. But again, our personal lines department has a ton of options for single-family rentals.
Yeah, I'm sure more than on the commercial side in a lot of cases. Yeah.
Yeah, we do
Um,
more large schedules of
mm,
rental dwellings.
yeah.
Yeah.
Okay, that makes sense. I know
Mhm.
we're over on time, but we still have some
Sure.
questions if you're willing to stay.
Yeah, absolutely.
Okay, cool. Let's do it. And Howard asked a funny question, but he says, "Will insurance companies offer you a lower rate if you install dummy security cameras?" I
No.
have a question though, as to I figured it was a no, but I'm
Yeah,
wondering,
that's
like,
okay.
do they go and check to see that the cameras, like, how do you show proof that that you have installed security cameras?
They usually ask for certificates, especially if it's monitored.
Mm,
They want those certificates showing that it works. Now, I'm not saying that it's not a great deterrent for crime, because you can still do that.
sure.
We have neighbors that have dummy security cameras, and I mean, I'm not a criminal, so I don't know for sure, but I would assume that it would still deter you from breaking in somewhere if you see those cameras. You're just not going to get anything from insurance related to that.
Okay, that makes sense. James asking if you can cover a little more on liability coverage for mold claims.
Yep, so that does exist. Usually it's going to be a sublimit for mold claims. Usually it's depending on the state, it can be 15,000. The most I usually see is 50,000. So 15 to 50. It's a sublimit. So I'm not sure exact details as far as what you're asking, but yes, mold and fungi usually have a sublimit when it comes to liability coverage. You're not going to get a full million out of it. And you probably don't want to pay for it even if that exists, but yes, you can include that. A lot of carriers include that in liability anyway. It's like a double-digit number. It's not a small, I mean, it is a small premium to bear when you look at mold and fungi coverage. So
Mm,
if that's important to you, you just want to make sure that you bring that up when you
mm.
ask your agent and when you review coverage.
And Marshall asked a question as well. He says, I have a 2-unit building in San Francisco built in 1927. It has knob and tube wiring.
Yeah.
I live in one and I rent out the other. Does our office offer insurance for my building? I'm not sure if he means our office or
Us.
your office. I think
So
your office.
yeah, that would definitely be personal lines because it's only 2 units. Knob and tube means you're going to be non-standard. So getting that updated is super important. Knob and tube is a big fire hazard. So that's something that, yes, we can definitely offer quotes for, but because of the higher risk with knob and tube wiring, you're gonna pay more for. Again, so we can really insure anything. It's just the price that you could pay with higher risks like that. And assuming since you're in San Fran that we don't include earthquake coverage, we can again, but you're going to pay for it. So when it comes to knob and tube wiring, we can definitely get you quotes, but because of that feature, it's going to be more expensive, but that goes for whatever carrier you go with. When they do an inspection, they check for those things. So it's just something to keep in mind.
James, going back to the mold question, he had a follow-up. Will an umbrella policy pick up the difference on the mold limits?
No, umbrellas usually will exclude mold liability.
Okay. And is there additional coverage for slip and fall outside of stairs, since slip and fall is a top claim category?
Oh yeah, liability is going to cover you for any liability claim that comes across. Slip and fall just is typically going to be the most likely claim that you face when it comes
Okay.
to any sort of liability claims with rental dwellings. It's typically slip and fall, but there are of course other liability scenarios that would be covered, but slip and fall was just the most likely one that you'll face as a landlord.
Yeah, that's true. So we have 3 questions that are all related to the age of a property. You mentioned the
Sure.
30 years. So I know a lot of you have properties older than 1993, I guess. So that's where we're
Yeah,
at now. It
I
sounds
know.
crazy to
Awful.
say. That seems so recent, but that is now old.
I know. I know.
David was asking, it's like, why aren't older properties judged more on factors like replacement of electrical, plumbing upgrades, newer roofing, overall solid maintenance, and the owner's claim history instead of simply just the age?
Well, they go hand in hand. So older properties are more prone, just like, unfortunately, if you think of people, more prone to break down, physically speaking, than something that was just built. So I mean, and I'm not talking about, like new shady construction or whatever, but typically older buildings they were built under different codes than what apply today. So when you have a building that was built in the 50s, there's a lot more that could go wrong in the past 73 years, sorry, I had to do math in my head, than a building that was just built 4 years ago. So the building that was built 4 years ago was more likely to be up to code because it applies to today's codes. Like aluminum wiring was up to code in the 70s. It is no longer up to code now. So those building systems, and of course, and just property maintenance in general, older buildings deteriorate. That's how it works. Especially when you have combustible materials that you use, that they break down. Wood breaks down more so than concrete, and quicker. So especially, I'm in the South. Termites are a not if but when situation. So older buildings are judged more harshly on maintenance because you have a lot of years of maintenance to look at. So to properly maintain a building is really the main concern when it comes to underwriting, is just to make sure that it's been well taken care of, and that what is no longer applicable to today's codes, they're brought up to date to meet today's standards. So that's just something to focus on.
So Walter asked a question, although, oh, bless you. I'm not sure if I understand it. Maybe you do. He's asking about solar on a carport or independent building insurance. That's the question.
Okay, so if the question is, can we insure solar panels? The answer is yes. It's attached to a building permanently, so yes, it can be included. We just want to make a note that they're solar panels. But I have some clients, especially in California. I have quite a few, I think mostly in the Bay Area, that have solar panels, and it's just included in the building insurance. So we just want to make sure. And that can also be, depending on the carrier, it can trigger a green discount, since you're green building materials are more and more carriers are providing discounts for green materials. So
okay, that's good to know. Carol, asking a sort of vague question here, but maybe how much do you anticipate insurance rates to increase due to wildfires?
It's really dependent on, and I know we talked about this before, it can be anywhere from 5 to 150%, which is not a great answer, Carol. I'm sorry, that's not the answer you wanted. But it depends on, do you have a wood frame building? Because if so, it's obviously much more likely to burn down than if you had a masonry built building. It also depends on the area you're in, the protection class. So how close are you to the fire department? Do you have central station fire alarm? Do you have sprinkler systems? Have you had a claim before with a wildfire? Those are all factors to take in. So if any of those answers are yes, then you're going to have a higher premium to be dealt with than if you have a sprinkler system, which of course will help. If you're close to a fire department, if you're in a lower than normal fire prone area, if you have a building that is not made of combustible materials, then you'll have a lower premiums.
Makes sense. James asking, are there any other areas of liability that have lower limits like mold?
Yeah. There can be. There are sublimits, but but sublimits for, so again, I'm in Atlanta, so I see lower, depending on the area. And I'm sure if you're in LA, again, any major city, if you're in a higher crime area, there can be sublimits due to abuse and violence and guns. They can, so uh, abuse is a big one. If you're in a higher crime area, you can see sublimits instead of having a full $1 million payout per claim. You can see sublimits like 100,000, 50,000. You can see it excluded altogether. So it's just something you want to pay attention to. But that's typically the other one that we see sublimits for, assault and battery, A and B for short. So assault and battery sublimits.
Wow.
Yeah.
Okay. Well, Jay asking, I think something we may have already covered, but maybe one more time. How much loss claim would trigger a premium increase? Is there a loss premium claim ratio?
There's really not a set ratio. It's really individually based. It depends on, are you looking at just a single family property, because it's going to be higher than if you're looking at a 1,000-unit property. If you have it's not only the severity, it's the frequency. So how many claims you have versus the payout, because even though it sounds a bit strange, insurance carriers care more about frequency than they do severity, because frequency shows a pattern of loss history. So if you make a claim every year, insurance carriers are gonna jack your rate up, because they know for sure that, or not for sure, but the trend is showing that you're going to make a claim again soon. If you have what we call a shock loss, so if you have one claim in the past 5 years that is more money, it's treated more as an outlier. So there's not really a percentage that is immediate, like, well, once it hits 50%, we're going to increase it by XYZ amount. That's probably something I could reach out to actuaries about, but since they're the ones that set the rates and they know more of the math and what goes into it, but it's a good question. So I can certainly I can do my best to find out and see if there's more, if there's a more specific answer for you. But typically speaking, higher likelihood of claims means you're going to face higher rates. I know that's a very broad brush I'm painting with, but that's kind of just how the umbrella of carriers operate.
Well, on that note, we'll end the webinar. I think we've covered so many questions. Thank you for staying over time.
Sure.
I know a lot of you are saying thank you. This was really helpful. Yes, we are going to give you all the webinar tomorrow. So we'll send you an email with the webinar, the PowerPoint slides, Lauren's contact information. So
I'll leave that up for you.
Reach out to her. If you said yes at any point that you wanted a consult, I'm automatically going to send your information to Lauren and her team so they can connect with you right away. But I'll also send it in the email tomorrow. So if anything comes up, maybe in the future, you want to change your policy, maybe not now, you should save that information. And they are a great resource. They can find a better solution for you potentially than what you have now. And obviously Lauren's generous with her time. I found her to be this way with her clients as well. So, it's very nice to have someone on your team. I think Lauren is a part of many multifamily rental property owner teams. You need a lot of different professionals in your wheelhouse to make your properties a success. So I will be in touch with you with that information. Lauren, thank you so much.
Of course.
I love having you
for having me.
Excited to have you on again. I think sometime later this year, I forgot what month, you're coming back with another update. So we'll keep you all informed, and
hopefully it'll be not as depressing, but again, these are overall trends too. So I just want to make sure people understand that it doesn't mean that you will face rate increases across the board, but it's just something to prepare yourself for. We're insurance worst case scenario people. So I'd rather you guys be pleasantly surprised than disappointed that I didn't prepare you enough.
I like that. Okay. Well, with that, everyone have a wonderful day. I'll be in touch with you tomorrow. Bye.